Hi, this is PR Sundar. Welcome to pre-market report sponsored by taxbuddy.com. US markets fell yesterday. In fact, US markets have been falling continuously. And yesterday, I was expecting some kind of a short covering in US market. But what happened, US futures were higher, but just before the market opened, the service data came. The data was very good. Nowadays, good news is a bad news for US markets. A good economic data means higher inflation, and so the interest rate hike fear comes. The US Treasury shot up to 3.5%, and which is the highest in last many years. And so the next higher one is a 5.4%, which was in 2007. Then the people say in 1981 it was around 15%. So I don't know where this US market is going. And Nasdaq is it was down 6 continuous trading session. So that's why I expected some there must be short hugely. So I was expecting some short covering, but instead of short covering, when this services PMI data came better than expected, so the people started shorting again. So it fell, but fell with a huge volatility. And Nasdaq 100, it fell 300 point and then shot up 250 point, again fell 250 point, But I would say on a close to close basis, the fall was not very big compared to the last few days. But other concern is that the US VIX has gone up. So day before yesterday, that means last Friday, though markets fell, the VIX came down, but yesterday the VIX shot up. So US markets and European markets, they both are in really very big trouble. And Nasdaq falling for 7 continuous days is something really a cause of worry. And Europe is facing the winter, and Russian gas is being stopped. And so Europe is also in a big mess. So even now, the US futures are showing significantly lower. So in all likelihood, Nasdaq will be making another history by 8th consecutive day of fall. And all supports are being breaking. And US analysts, I was watching some of the US analysts, they were telling me that, S&P 500 should take support around 3,900, Nasdaq 100 to take support around 12,000, and Dow should take support around 31,000. But all 3 levels were broken yesterday. But one good thing is that on a closing basis, it did not close below that level. But again, bad news is that right now the futures are indicating breaking of all those levels. So S&P 500 in the month of June, it hit a low of about 36.25, something around there. And then from there it went to 43.25. And now it's coming and breaking 3,900. And if 3,900 is broken decisively, people say the next target is the June low. So, people are, expecting the June low to be tested in the month of September itself. That is another 300 point fall in S&P 500. That will translate into another 1,500 point cut in Nasdaq and Dow. So naturally, Asian markets are lower, and SGX Nifty is indicating 200 point gap down. And as of yesterday, everything was looking very good. And at just one day of US market fall and can change everything overnight. So this is the risk. And until yesterday, I was bullish. And even both FIAs and DAs were buyers for a significant amount, I think for about 1,800 crore. But still, this gap down, because usually SGX Nifty always follow the global cues. So we will be definitely gapping down, but I don't know whether the gap down will sustain or not. But the gap down will wipe out the option sellers and those who have sold option. But however, yesterday people have sold aggressively call options only. I think now option sellers are changing their strategy on almost a day-to-day basis, from bullish to bearish, from bearish to bullish. So Nifty may recover, but the thing is, it's not going to recover like what it happened a day before yesterday. There was a 200-point recovery in the Nifty. Singapore Nifty showed below 17,500, but we closed above 17,700. September is usually a high volatile month, and we are seeing that. And this is going to be maybe another worst September after Lehman Brothers collapse. So markets are so unpredictable, huge gap up, huge gap down, And Nifty is likely to face resistance around 17,600. So we must be happy if Nifty closes around 17,600 by tomorrow for this. And though US markets fell, the Indian ADRs did not fall much. And Infosys was down, HDFC Bank was flat, ICICI Bank ADR was in fact in green. So the US ADRs are not reacting. So we have to see how here we will react. But as usual, today we can expect IT stocks to be down. That's because Infosys ADR is down, US Nasdaq is down significantly. So, when the markets are falling, IT stocks will be coming under pressure. And another stock that may drag the Nifty today is Reliance Industries, because for the last 2 days, the Reliance Industries has rebounded. But again, today, the crude prices started falling in the international markets. So that will have a negative impact on Reliance Industries. So overall, TCS, Infosys, and Reliance may drag the market down. And then the banks may have to support the market, but how far it can support? ICICI Bank is just, yesterday I think it is just 1 rupee away from all-time high. And so most of the stocks are trading closer to all-time high. But how far banks and financials can support the markets? That's $1 million question. However, they may try to support the market from collapsing. But anyway, 200-point gap down is already a big trouble. So clearly, TCS is hugely underperforming, and one can look at TCS for shorting on any bounce with appropriate stop loss, of course. And I'm selling call options aggressively in TCS. TCS, trading around 3120 like that. 3200 call trading above 50 rupees, and 3300 call trading above 25 rupees. And 3400 call is trading around 13 rupees. So if you have got a lot of money, and you can just keep selling call options far away, and 3400 all, it's going to be next to impossible for TCS to reach by the end of this month. And we have only 3 more weeks for the expiry. So if you are looking at a stock, because market is bearish, so we have to look at the stock which are in the downward movement. There are 2 stocks which have been in the downward trajectory. In fact, technically they both were short for a long time, for 3-4 days before itself. One is HDFC AMC, another one is OFSS, Oracle Financial Services Software Limited. So both are looking very, very, very weak in chart, and yesterday both added huge open interest on the short side. So keep watching these 2 stocks on the short side, and of course the entire IT pack and Reliance also in the large cap. So that's it for now. Hope you enjoyed watching the video. Thank you for watching.